right. A moment of silence for the bear market rally. Wasn't very silent, but that moment has passed. The bear market rally is dead, folks, and Jerome Powell has killed it. Any hopes of the much discussed, much anticipated Fed pivot, any hopes that that was just around the corner were dashed. They were dashed with a capital D. They were dashed today by Jerome Powell with his Jackson Hole press conference. Thank you, Gigi. She just snuck in here and gave me my coffee because I can't live stream without my coffee. All right. This channel runs on hate and discontent and caffeine. And by hate and discontent, it's mostly for the powers that be, mostly for the globalist elitists that run everything in the world and make life miserable for us. You guys, you're cool. I like you guys. But for everybody else, hate and discontent. Man, what a mess today. Let's just get right to it. First of all, we have got to say hello to Mr. Mish the Mod. How you doing today, Mish? Mish, I lost your audio. Did you go on mute?
Because
there we go.
I'm smart sometimes. There you go. I'm up. I'm doing really good. I'm somewhere out in Montana and a little place called Thompson Falls.
Thompson Falls. All right. Well, I can tell you, you can tell when Mish is west of the Mississippi because our phone conversations get cut off like 5 times a day. Mish and I, we talk a lot. Hey, did you see this? I saw this article or this data point came on. We get like half a garbled conversation in, and then Mish drives through some gap in the coverage, and the conversation gets cut off, and then we pick it up a half hour later. We get there.
And hours without the signal.
Yeah. And, well, we were talking about a lot today. We were talking about this chart right here in the S&P. Check this out. Right now, the S&P is down 117 points or 2.8%. Now, look, folks, I talk a lot about during CPI prints and when Jerome Powell speaks, I always say, don't try to trade the first few minutes, right? Don't let the algorithms have their way. Don't get caught up in that madness. Look at these first few candles right after Jerome Powell started talking. All right. Let's say you got in here and you started short. And then, oh, no, you saw this big green candle forming. So you covered your short and you went long. And then, oh, no, you got played. And that's why I always say, not financial advice, but I always say, don't try to outtrade the algorithms in the first few minutes or even the first day after a Fed press conference. You don't want anything to do with that noise. And I just couldn't believe when I was watching those candles during the press conference because I didn't hear anything dovish. I don't know where that green candle came from, but that was a bunch of garbage. Right now, down 118, almost 120 points. The Dow not faring any better, down 2.5%, 839 points down. We were this close to a spontaneous live stream today. I know we had this one scheduled anyway, but we were close to that 1,000-point down day. And when we go down 1,000 points, we do a spontaneous live stream because we have to cover that. And the one I am most interested in, the NASDAQ. Look at that NASDAQ chart today, down 455 points or 3.46%. Absolute bloodbath for the NASDAQ today. So look, folks, in case you couldn't tell from these charts, what Jerome Powell said today was incredibly hawkish. And I put out a text message in my community tab on my channel this morning. I said, that was the most hawkish Jerome Powell I have ever seen. Right? I've seen a hawkish Powell. I've seen a dovish Powell. I've seen wishy-washy Powell. I have never seen him come out guns a-blazing like he did today, ever. Not in his whole time at the Fed. Now, I recorded a reaction video. I just wrapped up editing before we started this live stream. So I'm probably going to publish that one later tonight, maybe around 6 or 7 p.m. Eastern time. I'm going to put that one out there. I cut out all the fluff from Powell's speech, and I got right down to the meat and potatoes of what he was talking about. And then I gave my reaction and my interpretation of what he was saying. That will be coming out in a couple of hours. So we're not going to go line by line through the speech now, but I recommend you check out that video. Let me summarize it. Jerome Powell is not your friend, in case you didn't know that. If you've been watching this channel, you know that already. But Jerome Powell made it perfectly clear today. He is not your friend. He is not here to help you, folks. Because, man, that was really hawkish today. And I mean, really hawkish. And for once, the market, I guess you had to beat this market over the head to get them to get the message. But today, the market received that message. There was no interpreting any other way what Jerome Powell said today. That was just so over the top hawkish. Let's see what we got.
Before we go too much further, Jose sent us a super sticker.
Oh, we got Jose. Oh, thank you, Jose. Let me. What happened to my StreamYard link? Oh my goodness, I got my wires crossed here. I'm still reeling from Powell's remarks. This is me reeling, by the way. This is my reeling face. There he is. Thank you very much, Jose. I appreciate the super sticker. Thank you for the support of the channel as always. And once again, thank you for the Buc-ee's corn nuggets that you gave me in San Antonio. I had the pleasure of meeting Jose Orozco and his mom in San Antonio when we did our spontaneous get together out there with Ninja and with Chris Taylor from Financial Prepper. That was a great time. Got to meet Jay Bravo when I was down there. That was an awesome day out on the water with Johnny Bravo. He is a really cool guy in person. He's a lot quieter in person, to be honest with you. He's like over the top goofball on his channel. He's a lot more reserved, a lot more cautious in person, but a really nice guy. That was a very cool trip. And thank you again, Jose. It was really cool to meet you as well, sir. All right, let's see what the bond markets are doing right now. All right, I'm looking here. I see, with the exception of the 1 month, the short end of the curve, the yields are all higher. And then the ultra long end of the curve, we got the 20 and the 30 year. They are down today. That is a flattening of the yield curve. The market is pricing in some risk here. The market is saying, wow, Jerome Powell just pretty much told us we're in for a long recession. So the market is pricing it accordingly. And the basis, what's the spread between the 10 and the 2 now, Mish? What are we down to? Looks like
the 10 and the 2, it was 31 last time I checked.
Yeah, we're right around oh no. We're at 26. No, not even 20. Jeez, just don't ask me to do math. Anyways, it's getting tight. It's getting tight. I can't do arithmetic, man. From the moment I wake, my brain starts going. I'm staring at charts and I'm running numbers, and by the end of the day, I am just mush.
It's 35
by the end of the day.
It's 35 basis points.
35. Thank you for doing the simple arithmetic that at the moment eludes me. By the way, I didn't say hi, Mom, hi, Dad. I love you guys. Have fun at dinner tonight. Say hi to Uncle Norman and Diane for me, will you? All right. And you can tell them I mentioned them on the air. They're totally famous now. Let's take a look at what the commodities are doing. We have got gold is down $22 today, or about 1.3%. Silver is down 2%, or 18.72. That is not a surprising reaction because higher interest rates, remember, bonds are viewed as competition for precious metals, which yield nothing. So higher interest rates means money will flow into bonds instead of precious metals. Not my money, certainly, but other people's money. And I've been saying for a while now that I think we've got some pain ahead for precious metals, even though in the long term, I am super, super bullish on precious metals. But I think this irrational market will give us a better price than we have right now. So I'm optimistic in that regard because I cannot wait to buy in at these lower prices. I do think we're going much lower. And I almost gave Jim Lewis a heart attack when I said $11 in my last interview on Wall Street Silver. And Mish, I know you're right there with me. At what is it? $12 was your base bid?
Yeah, I'm at $12, and I think that the problem with that is going to be that the vault is emptying fairly rapidly at 18. Yes. I can't even imagine if it dropped to 15 or below.
Yeah, and when he says the vault is emptying, for those of you who don't follow Wall Street Silver on Reddit, which you must follow Wall Street Silver on Reddit, by the way, if you're watching this channel, because that's where this channel came from. There's a guy on Wall Street Silver named Ditch the Deep State who posts these regular updates of the inventory at the COMEX almost daily. It's like every other day he posts them. And the COMEX, which is the organization that is basically the group of banks that rigs the price of precious metals, it has been bleeding silver bars like crazy this year. When the silver squeeze started, there was about 150 million ounces of silver in the COMEX registered vault. And the registered vault is the silver that is up for sale at any given moment. That is down now around 50 million or 51 million. I haven't seen the last, but it's bleeding out at a rate of a couple million a week right now. And that's the market shrinking. That's the liquidity disappearing, right? And if the market gets too illiquid, you're going to get crazy price swings. And right now, someone is buying up silver like crazy. The inventory keeps going down. I gotta bring on a silver guest one of these days. I mean, heck, let's talk about it now. I'm going to be at the Silver Symposium next week. So, while we're on the topic here, I have to mention it. The Stock Post Silver Symposium, this is the biggest precious metals conference in the country every year. And I'm really looking forward to doing this. I'm giving a presentation on the collapse of the Chinese housing market and my interpretation of what effect that will have on the silver market, as well as some other things. Ninja's going to be there. Joe Brown Heresy Financial is going to be there. A whole slew of guys. Looking forward to meeting a lot of these folks. It's going to be a really good time. It's on the 30th and 31st next week. So if you use the link down in the description below, you'll get 10% off your tickets to that. I hope to meet some of you guys. I know a few of you have mentioned in the comments that you're going to be there. If you see me, by all means, come and say hello. I love to meet viewers in person. It's always a good time. And that is all I got to say about the Stock Pulse Silver Symposium. What else we got going on in the commodity space? We've got oil up about 50 cents today. That's interesting that crude is heading higher right now, because when Jerome Powell is on TV saying, I am going to make the recession worse, you'd think that would send oil prices lower. But I think oil has put in a bottom. I'm cautiously saying that oil has put in a bottom, because it seems like all of the bearish pricing pressures for oil, like the Iran nuclear deal, like, increasing production from the Saudis, which isn't going to happen now. That's all baked in already. A little bit of demand destruction is already baked in already. And the SPR, they can't keep draining that forever. And my God, the situation in Europe is just beyond insane. I think a bottom is in oil. We're going to look at the oil chart a little later to see for sure. Natural gas, wowza, 926 per million BTU for natural gas in the U.S. What is that, about triple what it started the year at? And keep in mind, that's the United States. We are one of the most natural gas secure countries in the world. I think only really Russia and Qatar at least produce more gas than they use versus the United States. Although we're now the biggest exporter of natural gas in the world, so I guess maybe not. But 926, I mean, that's European demand pulling on prices here in the States, and that's only going to get worse as the just lunacy of the European energy markets continues. And then looking down here, we got an awful lot of green in the metal space. Zinc, nickel, everything is up. We've got wheat is up 2.8%. Corn is up 1.8. Soybeans up 2.3. So a lot of green in the commodity space, with the exception of precious metals. All right. Now, I want to get a little bit into this chart here. We've been talking a lot about the NASDAQ recently. And on my Patreon live stream, or my Patreon Zoom call this week, I deleted that descending wedge pattern that we've talked about a lot in some of the live streams. By the way, thank you very much to my Patreon supporters. I appreciate you guys very much. Also, link down in the description if you feel so inclined. But I want to reproduce a little bit of the chart that I talked about on my Patreon live stream on Wednesday, with one little twist, something that I just spotted today that I hadn't seen coming, but it snuck up on me. Right now, what I want to do is I want to connect some of these recent highs that we saw earlier in the year. This is looking at about 8 months here, right? Here's December. This is January, the January highs, right? We've got this descending level of resistance. Every time we hit it, we broke lower. Now, then we entered that descending wedge pattern that we broke out of. We broke above this line, but failed right away. We failed the back test. We broke above it again, failed the back test. All right, so that's twice now we have failed to break above this line. So this is a very strong ceiling of resistance that we're right up against right now. And then today, with Jerome Powell killing any hopes of the Fed pivot, I think this line is now a hard ceiling. I don't see us going back above this line. All right, now a couple of other things I saw. You notice throughout this whole bear market rally, which is shown here starting in June, that we were making consistent higher highs in the relative strength index, which is this line that I just drew right here. You see how the highs are getting higher as we're moving up. The lows are getting higher as we're moving up, right up until this last high here. And you notice if we zoom way in on the RSI, let's get rid of that line. You see here, we've got a double top in the relative strength index. The relative strength index, that's a measure of momentum. And a double top is a very bearish reversal pattern. And this tells me that even though the price was continuing to move higher, the RSI failed to make a new high. That is the buyers running out of steam. The buyers were exhausted. All the dip buyers, they BT'd the F&D and they were done. And there was no new money coming into stocks. At the same time, the MACD, the moving average convergence divergence, another measure of the momentum, we had a bearish cross in the MACD or a death cross in the MACD here, where the moving average convergence divergence moved below the signal line, very bearish signal. Let me just make that a little bit bigger so you can see here, clear as day. That's a sign that the NASDAQ was headed lower. All right, so that's the chart that I drew on my Patreon call this week with my Patreon supporters. But then today I saw something else. We're going to make this chart a little bit bigger because let me know when you guys see it here. Let's get rid of this line. Let me get my little doodle tool here. What I'm seeing today is I see that there, and I see that there, and I see that there. Who can tell me what that looks like? That's right, anonymous person who just shouted out, even though I could not hear you through the interwebs, that is a head and shoulders pattern. That's exactly what that is. That's a head and shoulders pattern with a neckline right around 12,300. All right. And head and shoulders pattern, again, that is a very bearish reversal pattern. It's just about the worst pattern you could possibly form as a head and shoulders pattern. And with a neckline around 12.3 and the top around 13.1, 13.2, that tells me we're heading somewhere around 11,500 is the next support the NASDAQ is going to find. And that puts us right around here, which if you see 11,500, well, that is right about this previous resistance that we encountered before when we were breaking out of that ascending wedge pattern. So this is a real ugly chart for the NASDAQ. And you combine this very ugly chart with Jerome Powell's very clear as day assurances that there is no pivot coming anytime soon to save the stock market. NASDAQ is heading lower, folks. NASDAQ is heading significantly lower. And I have a couple of super chats I got to catch up with right now because I've been on my soapbox too long. So let me get to you guys down here. Hello, Mike Binder from Robinashi Models. He says, worried about a short-term bear trap. Interesting. Up into the monthly close just for Max Payne. 2023 puts on QQQ or ARC would give nice returns if there's a pump. I mean, shorting ARC, ARC investment, I don't mess around with that one, to be honest with you. Kathy Wood has become the punchline of a joke on CNBC right now. They keep putting her on the air. I don't know why. Now, puts on QQQ. I was very close to buying puts in QQQ today. I didn't pull the trigger on it. I was right there. And then I remembered my own advice. Don't trade right away after a Fed event. All right. Don't get caught up in that. So I didn't buy those QQQ puts today. If I had, I would have done really well because I was right about to pull the trigger and we lost another 150, 200 points on the NASDAQ after I decided not to make that trade. So right now I have no skin in this game if we're doing full disclosures, but I probably will very soon because I just, the only, now that we've got a full-blown hawkish Fed, the only thing I can see saving this market now would be a very low CPI print. But as we'll see later on today when my reaction video to Powell's speech comes out, Powell pretty much took that off the table. I mean, he said outright that one low CPI print is nowhere near enough to get us to change course. And if one is nowhere near enough to get us to change course, then two sure as heck ain't going to do it. So it means even that low CPI print, which is still 2 weeks away, so it won't get here in time to save this market. And even when it does get here, Powell has already said that doesn't mean the Fed is going to ease off. It's not going to loosen the vice that it has the economy in. So if you ask me, Powell's press conference today, it took the two things, the two possible bullish motivators for this market. And this is something I talked about on my Patreon meeting this week. I said there were two things that could save this chart. And it was a dovish Fed and it was a low CPI print. And today the Fed was so hawkish that took that one away. And they also said, because we're nowhere near getting to the point where we would reverse based just on one CPI print, in my opinion, that also took the low CPI print off the table as a motivator for a move higher in this market. So I'm at the point now where I think we're heading lower. We're heading lower bigly. We were way too eager to declare this bear market over. I get it. I'm a perma bear, broken clocks, right? Eventually I get all that stuff, but I just never saw the optimism that everybody else was saying that the Fed was going to turn the printer on. I mean, they've been telling us all along the tightness in the labor market and they're so afraid of unanchored inflation expectations that they're going to keep cranking down on that vice. They're going to keep squeezing the economy. They're going to put people out of work and cause a recession. But thank you very much, Mike. I appreciate the super chat, sir, and the support of the channel. And I also appreciate some of those links you sent me today. We will get to those in just a little bit. And I got to say thanks again to Mr. Jose Orozco. Thank you, Jose, for the super chat. It says, Jack, what do you make of 20 million Americans behind on their electric bills? Fed now coming sooner than expected. I worry for Europe this winter. Sad. There's a lot to unpack there. But, Jose, you're so right. You are so right with that comment. And, yes, it is incredibly sad because, you know, I get it. I'm the perma bear, right? And I do a lot of the doom and gloom. That doesn't mean I take any joy in being right about the energy situation in Europe. And I am right about it. It's going to be a freaking disaster. It'll take one form or another. It's either going to be a banking crisis or they're going to print so many euros and put everybody in the dark. Either way, it's going to be miserable for the average European. So I feel for you guys over there. Please be safe, folks, and start taking steps to prepare yourself now, because your government is not going to save you if Mother Nature decides to make it a cold winter. The government will not be there for you. So take steps now to prepare for it, please, if you haven't already. Now, interesting you should say, Jose, 20 million Americans behind on their electric bills. That story came out this week. Economic Ninja did a video about that one. And that's true. The utility bills, they're getting higher. And 20 million people, that's not a token amount, right? How many households are there in the U.S.? Something about 90 or 100 million households in the U.S., something like that, Mish?
120.
120. My God, you are just this wealth of data. Having Mish on the channel is so great because I can just like throw out a question like that and boom comes the answer. Johnny 5 with the input, man. 120 million households, 20 million of them are short. What's the percentage of that is now not paying their bills? It's 1/6. What's that, like 12.5%, something like that? Or 15%?
Yeah, I think it's closer. Yeah, it's high teens.
Yeah. So 1 in 6 households in the United States is behind in their electric bills right now. And I can tell you the electric bills in the U.S., they have gone up. They've gone up a lot, but they have not gone up anywhere near what they've gone up in Europe. So if 1 in 6 Americans ain't paying, can you imagine how many people are behind on their electric bills in Europe right now? And how many people?
Almost 17%.
17%? Thank you, Bish. Can you imagine how many will be behind? Because I got comments from some of you guys. By the way, thank you guys. All these folks who are like, someone said, I'm in the UK and my bill is about to go up 80%. Somebody said, I'm in Spain. My bill just went up 60%. I love these data points. Keep them coming in the comments. I love this stuff because every one of these kind of fills in a little bit of the picture and it becomes more and more clear the more granularity I get in that data point. So please keep that stuff coming. But I mean, if 20 million Americans are already behind on their bills, can you imagine what's going on in UK where they're just beginning an 80% price spike? And by the way, we're going to talk a lot about European power. 80% is not nearly enough. It's too much if you're paying the bill, but if you're the utility company, it's not enough to save you. Those prices have to go way higher, way higher. And that's why I did that video yesterday about how the numbers have now gotten so big in Europe that this is not an energy crisis. This is going to fast become a banking crisis. Because if you add up all of these utility bills and what these power prices, the actual cost to deliver the electric and the gas to the average European household, forget what the utility bills are, which is too high for most people, but the actual cost to deliver that fuel is now higher than the principal and interest on the average American mortgage in 2008, right before the Lehman collapse. And 5% of people in the United States not paying their mortgage was enough to cause the global financial crisis. So what do you think happens when the payments for these utility bills are now, or the cost of these utility bills is as much, and we've already got 17% of Americans not paying their utility bills? You're probably going to have 25, 30% of people in Europe not paying their utility bills. All these utilities are going to go out of business. They're going to default on their loans, and Europe's banks are going to be holding the bag. And you're going to have a financial crisis in Europe caused by this energy crisis. And they're going to blame it on the greedy banks, and they're going to blame it on the greedy oil companies. They'll blame it on anybody but their own rotten selves, because this is a man-made disaster. There is so much freaking energy in the world, folks. There's so much of it. We have so much in the U.S. We're practically tripping over it. We deny it to ourselves because our leaders are frightened children. They're frightened, imbecilic children. We're going to talk about those frightened children in a little bit also, because I saw something today. My man Brian Zarb sent me something today that really just grinds my gears, and I dug into it a little bit, and I found something sleazy. When I dug into it, stick around. This stuff is going to make you grind your teeth. I'm telling you. Thank you very much, Jose, for your comment. It was very thoughtful, and it's right on the money, man. I mean, everything you said is right there, and it's going to be tough. You folks in Europe, I'm really sorry you're going through that. Get ready, man, because it's gonna be rough. And thank you, my friend AK. I appreciate that. It says framing futures, corn. I'm guessing that's corn, wheat, and 16 September. Some say this can bankrupt farmers. Is this true? Farming futures, corn, wheat, and September 16th. This can bankrupt farmers. Is this true? And new budget, U.S. Gov is in the '01 Oct. Where is the money coming from? Not the student loans. PS TradingView Pro is the best one. Okay, AK, I'm having a little bit of trouble piecing together the comment a little bit here, but corn and wheat bankrupting farmers. I'm guessing you're talking about if they're short, right? If farmers have already sold and then their yields come in short, not enough, and they need to go into the spot market and replace what they've already sold, that could be a situation that could bankrupt farmers. Yes. I'm not sure it's there. Crop yields, a lot of the estimates, and we do follow this a lot. We haven't talked about it a lot on the channel recently, but we do follow this mission I pretty regularly. The yield estimates are coming down, and they're coming down rather sharply, but not enough, I don't think, that we're going to have the situation with widespread farmers going bankrupt. I do think we're looking at shortages down the road, especially in countries that are struggling with the currency exchange rates. And the yields have fallen due to the higher fertilizer prices. But what I suspect happened, that big run up we had in grain prices in January, February, March, ultimately it peaked in like late April. It looks like that run up in prices was enough to convince a lot of farmers to fully plant their field and to fully fertilize, to eat that higher fertilizer cost, because the grain futures were up higher. And of course, as soon as they invested all that money into that planting and into that fertilizer, the grain futures collapsed and they fell down bigly over the course of this summer. So now they're kind of suffering from it. But I think we're going to be right back where we started in the fall, just from a higher starting point, where we're going to see fertilizer prices are going to run up because they're already shutting down the fertilizer plants in Europe again. So we're going to see fertilizer prices start to come up. We're going to see the grain futures are going to start to front run that. So we're going to be right back where we were last year, running up in the grain futures, but we're going to be starting from a much higher point. Now, will that bankrupt farmers? Again, I don't think we're there where we're going to be bankrupting farmers, but I think we are going to bankrupt a lot of people in the developing world who are suffering from currency exchange rates and already can't afford the higher grain prices because their currency has so weakened against the dollar. Now the dollar is getting stronger and the grain prices are heading higher. That's a very bad situation for people in the developing world. So sadly, again, more things like protests, more things like riots and unrest in the developing world. And again, I do not take any joy whatsoever in being right about that. I just did an interview with Jesse Day on commodity culture a couple of days ago. I got a message from him that's going to be airing on September 7th. And we talked all about grain commodities again and the civil and the social unrest. And I mentioned it there. I said it as early as like January 5th this year that 2022 is going to be known for civil and social unrest. And I would not have mind being wrong about that. It would not have upset me at all to be wrong about that. But unfortunately, I wasn't. Unfortunately for the people in Sri Lanka. My God, what happened in Sri Lanka? Just idiots in
Before I get
charge.
too far away from that, what they're also adding that I guess there's a story out there that there's going to be huge penalties for undeliverable future supply, and that's what's going to hurt the farmers.
I hadn't seen that story. I'm going to have to put a pin in that and circle back on that one. There may be a video in there somewhere. I had not heard about a penalty for default. I mean, the penalty for failure to deliver on a futures contract has always been you got to go into the spot market and buy it and deliver on it that way. I've never heard about outright failure, but it's not like I don't know for sure if the agricultural commodities is like silver, where the COMEX can just basically force you to settle in cash and not deliver on it. I'm guessing food commodities are handled a little differently because the consequences of not delivering is people get hungry. So it might be a little different there. I just don't know enough about the mechanics of the grain futures and how that operates to be able to comment on that. But we're going to have to look into that one. But thank you very much, AK, for the support of the channel, for the super chat. I really appreciate that, guys. Thank you very much. I appreciate your generosity. All right. Let's see. I think we beat the NASDAQ chart to death, didn't we? Oh yeah, by the way, I had this one. I had to have my Darth Vader ready. That's what came to mind when I saw that head and shoulders pattern. I like to keep that handy. Darth Vader, use only in dire circumstances. All right, let's see. We've got the DXY. The DXY is headed up again. I saw a couple people in FinTwit, financial Twitter, were mentioning a potential double top pattern in the DXY, which I can see that here. You know, we had around just at 109 or high 108s. And then we came down and looks like we failed to retake that level. But I think Powell's hawkishness today may be enough to break us above that double top pattern in the DXY. A lot of people who I follow and who I respect and I value their opinions are saying the Dixie is topped and it's heading lower. And it looked earlier this week, it looked like they were right. But I'm not sure with Powell coming out as hawkish as he was today, and with the absolute nonsense going on in European energy markets and the inevitability of the money printers in Europe trying to solve this energy price crisis, I think the dollar's probably going higher still. I really do. We'll see what plays out there. All right. Now, speaking of European energy, I got to send a shout out. Who sent me this? Was it Brian Zarb or was this the one? No, this was sent to me by Mike Bender from Robin RC Models. Thank you, Mike, for sending me this today, because this was eye-opening when I saw this one. This is a scary article, and Zero Hedge wrote this article based on something that they read in Bloomberg from Javier Blas, which, by the way, you should be following both Zero Hedge and Javier Blas from Bloomberg. Zero Hedge I just find incredibly entertaining, and they're like first movers. Every time a story hits, Zero Hedge is like the first one to cover it. And Javier Blas has some of the best energy commentary I've seen anywhere in the press right now. All right. And I'm not a big fan of the mainstream financial press. You guys know that. But Javier Blas is one of my few exceptions. He is right on the money with his commentary on the commodities market, in particular energy. I'm going to read you a little bit about this because this is scary. Calls between energy traders and the UK grid operators reveal power crisis might be far worse than expected. Once a week, energy traders hop on a call with UK's electricity network operator National Grid managers to ask a series of questions about the state of power markets. Bloomberg's Javier Blas's latest opinion piece reveals some of these conversations between traders and managers that paint a rather dark picture of winter for the UK. Here are some of the questions from power traders from last week's call. Are you wargaming possible options for if and when cross-border trading collapses under security of supply pressures this winter? All right, so there's a little bit of energy trading lingo in there. You might understand what he's saying here is to the UK grid operators. What's your plan for when everybody decides it's too cold and we don't have enough power? Screw the neighbors. I'm holding all the power for myself. I'm France. I'm not selling any to the UK, or I'm Germany. I'm not selling any to France, or vice versa. They're saying to the grid operators, what is your plan for the inevitability of when these countries start hoarding their own power to suppress prices in their own markets? That's scary. Remember, this could be the end of the European Union. This could cause another Brexit or several Brexits among other countries. This is serious, folks. This energy situation in Europe, I cannot overstate how serious this could be. On another call, he says, can we have a session where we talk through the emergency arrangements? Like, what is your plan to keep the lights on when there ain't enough juice? Another participant said that the forecast for demand and supply electricity balance showed how bad the winter could be for anyone who can do the maths. That's right, because anybody who pays attention to math and not just unicorn and rainbow talking points about the energy transition and expediting renewable development understands that winter is going to be here a whole hell of a lot sooner than the freaking solar panels are going to save us. We do not have time for ESG green fantasies to catch up to the laws of physics. Winter is coming sooner than that. The Starks are always right eventually. It's one of my favorite lines from Game of Thrones. Another participant said that the forecast for demand and supply electricity balance showed how bad winter could be for anyone. Oh, I already read that one. I'm sorry. Edit that out from the live show. We'll just edit that out. The same caller was blunt about the grid's own predictions.
Just so you know, we're over 950 and headed south on the Dow.
Oh, we're over 950, so we're coming up on 1,000. Oh boy. Hey, Nish, if we hit, keep an eye on that chart. If we hit 1,000, cut me off. I don't care if I am on the roll of rolls. Cut me off if we get to 1,000, brother.
Will do.
The same caller was blunt about the grid's own predictions. I don't think you believe what you've written, and nobody else does. This is what he's saying to the grid operators. He's saying, the grid operators are like, oh, don't worry. We have ample resources to provide for everybody this winter. Don't worry. We're fine. And then the guy's saying, I don't think you believe what you've written. Nobody else does. One trader asked a question about intervention during a winter crisis. Based on where winter 2022 products are trading, meaning energy futures, where does this position yourself with respect to securing power over the winter? And why are they so worried about that? Where are these comments? Well, look at what base load power in the UK is being priced at. Now, folks, I want you to understand this is base load power. All right. This is not like peak power prices, right? There's base load power and there's peak power. Base load is like the amount that you always need, right? You need base load generation on a cool fall day when nobody's running the heat and nobody's running the air conditioning, right? The house is a nice temperature. Maybe there's not a lot of industrial activity going on, but people have their lights and their computers on, a few people watching TV, right? That's your base load power. That's the cheapest power on the grid. And that is what this chart is showing, the cheap power. When it gets really hot and everybody cranks up the AC, or when it gets super cold and everybody cranks up the heat, that's when your peak prices come in. And peak prices are always much, much higher than base load. This chart is base load. Now, here in Pennsylvania, where I live, I think the highest peak price I've ever seen in the U.S. was $300 per megawatt hour. That's the highest peak prices I've ever seen in the Pico grid where I live. That's peak. The base load is like 22, 23. This is almost 900 euros per megawatt hour for base load. I'm sorry, no. This is 900. This is almost 1,000 pounds. Jesus, what is that in dollars?
Oh, what's
the
that?
euro might be better.
800? No, I'm sorry.
My God.
Wrong way.
Yeah, no, it's higher.
1,400-ish.
Oh my God. This is economic suicide, what Europe has done to their energy markets. I've been saying it for years that what we're doing in energy policy is economic suicide. I'm so much fun at parties, really. I'm a real gas at parties. I suck the air right out of the room with my BS. But that doesn't mean I'm wrong.
No.
Oh, and as Blas pointed out, the British government is offering an optimistic tone about there's nothing to worry about. They're saying households, businesses, and industry can be confident they will get the electricity and gas they need over the winter. Downing Street said earlier this week, that's because we have one of the most reliable and diverse energy systems in the world. Oh, they're very proud of their diverse energy systems. That's a buzzy word. Oh, my God.
Just so you know, we're at 990.
990. We're getting close. Are we going to hit a K? We got 6 minutes left. Are we going to hit that 1,000? Selling off in a close.
We're at 1,000.
Oh, boy. All right. We're going to pause the energy doom and gloom to bring you stock doom and gloom. Mish said 1,000. I'm showing 985 down on investing.com, which is usually real time, but we're right there. What are you looking at? You at TradingView, Mish?
No, I was on investing.com. The US 30 leads the Dow Jones by a couple minutes.
Okay. We're close. Yep, we're close.
Yeah.
What's the NASDAQ? Well, let's go through. We got 5 minutes of trading left. Let's look anyway. The S&P is right now down 136 or 3.3% and heading lower. The Dow is down 985, just under 3% at 32,374. And the NASDAQ leading the way, now down 522, just a hair under 4% at 12,620. This is the worst day I've seen in the NASDAQ in a while. We haven't had a day like this in the NASDAQ since like April, early May.
Yeah.
This might even be worse. I know we had a few 500-point days. We did have a few 1,000-point days in the Dow earlier this year. We had a few in a row, but this is up there. But this is the market. Again, it took one of the most hawkish Powells I've ever seen, the most hawkish Powell I've ever seen, to get the market to understand that message clearly. because all of these last couple of Fed press conferences, I mean, I've been sitting here scratching my head at the market's reaction saying, the market is interpreting this as dovish. I don't see a lot of dovishness coming from Powell. And then they telegraphed this move because a few days after the last FOMC meeting, I remember I did a video. They marched out 7 different Fed governors on the same day to jawbone markets, and every one of them was hawkish. So they told us they were going to do this. We knew this was coming. And, like, I get the occasional troll or the occasional critic. We'll stop short of troll. We'll say I get the occasional critic who comes in and says I'm too bearish on, the market is just going higher and higher. You've been wrong about this. Yeah, I was wrong about that. The market did go higher, but the market went higher for the wrong reason. The market was interpreting all these statements from the Fed as dovish. They weren't dovish statements. The market thought they were dovish. They weren't. So I guess I was just wrong about the market's interpretation of it. But not now. I'm not. So anyways, broken clock right eventually, right? I guess I can't sit here and I told you so, everybody. All right. So let's go back to where are we? Have we hit that 1,000 point yet?
Yeah.
No. Oh, yes, we did. There it is. Down 1,001. 3.01%, 1,000 points down, selling off big candle down into close with 3 minutes left. Wow. I mean, I see it. I was watching Powell this morning. I couldn't live stream it, by the way. It was not being broadcast on the Fed's website, and I didn't want to live stream somebody else's live stream. That would just struck me as kind of sleazy, so I didn't do that. But I did do that reaction video. That will be out in a couple of hours today. Man, down 1,001 points. And I got to send a shout out to Mr. Mike Binder, who sent me this fantastic article on Zero Hedge, by the way. Thank you, Mike, for that. He says ESG is a scam. Yes, pounding on the table. I 100% agree with you. To get political handle on allocation of capital. Yes. Yes, Michael. Thank you. Took the words right out of my mouth. FYI, German total wind power is 90 terawatt hours per
annual.
Okay, per annum. Thank you, Mish. 90 terawatt hours a year. The nukes in Ukraine that went offline are 30 terawatt hours. Wow.
That hurts.
Yeah, I was about to do a video on the nuke units that went offline in Ukraine. There is a lot of FUD, a lot of doom and gloom going on around those units, and shelling near a nuclear power plant is fundamentally stupid and reckless and suicidal, and it should absolutely not be done. That being said, there are a lot of people who are trying to make a huge deal out of what could happen, and they're using a lot of scary language to frighten people on both sides, and there are political motivations on both sides to do that. And I think Putin has good reason to scare everybody with nuclear, and I think Zelensky has good reason to scare everybody with nuclear. And both sides are accusing the other of shelling near the nuclear plant. Well, both sides benefit from that shelling. So it doesn't matter who does it. Knock it off, you stupid a-holes. If you want to kill each other, go to a field and kill each other all you want. You don't get to poison half of Europe. There. I'm glad we had that settled.
Yeah.
Now go to your rooms and think about what you've done. Go ahead, Mish.
I said, yeah, a-holes.
Yeah, they are. They are full.
Closing time.
Wouldn't it be great if wars were fought by the a-holes who started them?
Mm-hmm.
Wouldn't that be great? But yeah, all this, to your point, Mike, all this investment in renewable power, and it has not done anything but kill baseload generators. There's a whole video I could do about that, about the mess renewables are making on the grid. There's too much power when you don't need it. There's not enough when you need it. You cannot run a grid on renewables. It doesn't work. No math. Physics matter. Math matters. Oh, but unicorns and rainbows.
Investing.com says Dow Jones today was down 1,008.
1,008. Yikes.
NASDAQ was 497.
Ouch. Let's see what we got. Let me refresh this because, yep, down 1,000. I did see 1,008 a second ago. I guess are we in that post market? We are into the post market now.
We are. All the numbers weren't red on the Dow Jones.
So let me get through this. Let me get through the last of this article, and then we're going to bring Sage in for the economic traffic report. I see Sage is backstage right now. We'll bring him in a minute. Sage, get ready if you hear me, brother. All right. So I want to wrap up this article that Mike had sent me. Thanks again, Mike, for sending me this article. says traders are concerned that if a system stress event hits a neighboring country and cross-border electricity flows are switched off, that could spark even more chaos for the UK power grid, right? And what did we see in food markets last year? We saw countries started to ban exports to try to suppress prices in their own markets to supply themselves, and they screwed their neighboring countries. And what they're worried about right now is that Europe is going to do the same thing this winter. Please, the market needs to understand more fully how interconnectors are to be used in periods of very high prices and potential generation shortfall, one market participant said last week. They are begging the grid operators to let them know what's going to happen if there's not enough power on both sides of the border. Are we still going to be interconnected to each other, or are we going to break those connections, and is it going to be every man for themselves? My money is on every man for themselves, because these people, these ESG mandating globalist muckety mucks, just love to talk about a global community and everybody sharing and kumbaya and unicorns and rainbows right up until things get scarce. And then it's every man for himself, screw your neighbor. Mark my words, that's what will happen if it gets too cold in Europe this winter. All right. And I just want to read this last part here, because this is, first, the looming power emergency is worse than many industry executives publicly acknowledge, and a lot more dangerous than the government admits. Second, high prices are a big problem, but security of supply is at risk too. And third, time is running out to prepare before temperatures start to drop. And Javier Blas warned European governments have a duty to come clean with their voters about the magnitude of the coming crisis. This is from Javier Blas, who understands energy markets a whole hell of a lot better than the average person, than any of these governors or any of these presidents or prime ministers or any of the EU execs. He's saying these governments have a duty to come clean with their voters about just how bad this is going to get. And right now, they're not doing that. All right. And real quick, I want to touch on Miracle Oil, who sent me a super chat, and then we're going to bring in Sage for the economic traffic report. Miracle Oil says, hi, when is the Iran deal done? Are you entering oil soon? Yes, I will probably be entering oil soon. I don't have any positions in oil right now. The market is it's looking very bottomy. The Iran nuclear deal is potentially more supply coming online, but I'm seeing a lot of news lately that OPEC is saying prices are too low. We're thinking about starting to cut production. So if this Iran nuclear deal does happen and another 1 million barrels per day of oil comes online and starts trading on the global market, the rest of OPEC may just cut production to offset that. Oh, and we still have to stop dumping the SPR sometime soon. So oil is looking like it put in a bottom, Miracle Oil. I still don't have a position, but we are very close. Thank you very much for the super chat, by the way. Yeah, that's all. I haven't made the trade yet. I haven't made many trades at all because the markets have not been behaving very rationally. I've been saying for a while that they should be heading down. They're finally starting to go down. So hopefully Jerome Powell finally killed this misplaced optimism. All right. It is now 4:04. Let's bring in my man Sage with the economic traffic report. Let's add him to the stream. What's going on, Sage?
I'm coming and you can't make me. This stream has gone all downhill. I'm trying to get more subscribers, and you're talking about the E to the S to the G, my friend.
You mean the FEW backwards?
Yeah.
Talking about that?
Yeah,
Ooh.
you're talking about that type of stuff. I'm not buying any stock in silver. I'm buying stock in volume on this show. I'm telling you right now. I swear. I got to wear disguises to come on the show now. I'm going to find some disguise. What's going on? So did you get my screen? Okay, you did get my screen. So what I wanted to kind of talk about real quick was everything that's kind of going on the shipping side. So right now, and we have so much freight coming in at some of our eastern ports that we have a ton of inventory at the stores, the warehouses, the distribution centers, and things like that.
Wait a minute, Sage. Hold on. I got to cut you off. You're saying we have more stuff coming in?
We do.
Because I just read a story that said Walmart and Target were rushing to cancel orders and that we already have too much inventory on the shelves. You're saying there's more coming?
Yes. All these ships right here is a large quantity. So what happens is there's actually a delay. So if I were to cancel an order today, it wouldn't cancel for anywhere from 60 to 120 days. that cancellation. So you still have ships and things that have been made and that have been paid for, right? Because it's not leaving China unless it's already paid in full, that are going to be loaded onto ships that are heading towards containers, are going to be put into that onto that ship and still going to head this way. Let alone what we're looking at here is the Savannah port of container ships that is waiting to be offloaded. So we still have probably 3 months of goods that are going to be coming, and we're already maxed out because inflation is making people buy the needs rather than the wants. And so the needs would be food and things like that. So that's staying high, but you're going to see massive sales on some of the wants. And take it from a man who has a wife who's a professional shopper, not at my choice, but more as her choice. Click it and ship it. She is seeing a bunch of sales and things like that. And that is like, for somebody who's an addictive shopper, I almost have to pull her away. But it's
I'm afraid Gigi's going to hear you right now, Sage.
Okay, I'll whisper.
Ixnay on the ale say.
Okay, I'll whisper. You can't hear me. But this is some of the stuff, and this is where I see him hammering us. I'm going to say 1 point next time we come for that meeting, because in my opinion, he's going to hammer this because we've got to control this bullwhip effect. We were at the top of the bullwhip and then the bottom of the bullwhip, and that bullwhip is basically now bringing us goods that is costing manufacturers money because they have to warehouse it, and then they have to pay, simple numbers, $10,000 a month for a warehouse to fill goods that they don't even have room for. And the biggest factor is that the trucking prices, freight rates to truck drivers are going way down because the shippers don't want this stuff. So they want to ship it for the least amount possible. There's no rush to get it. So trucking prices are going way down to the point that a lot of truckers are now deciding to sell their truck and get out. And if things were to kick back off again and get busy again, we're probably not going to have the truck drivers we'll need. That'll raise the price of inflation again from the logistics side, and we'll be right back where we were.
So says too late, by the way.
Too late. Nice. So we're looking at the truckers, the final destination folks. They don't want the stuff because they're already smothered in inventory. And we saw that in all the retail earnings reports this last quarter. And yet the stuff is coming in through the ports, and the truck drivers aren't making very much money. So there's not a lot of demand to get it from the ports to the store. So are these cans just stacking up at the ports? Is that what's happening right now?
So a lot of times what they're doing is they're either waiting for the rail, for that spot on the rail to move them as cheap as possible. This is Norfolk, and I'm going to go up. Or they're waiting for basically their regular company, that whatever price that was set for, to just come and pick it up whenever they want. There's no rush to get it. So we have a regular market, and then we have what's called the spot market. And a lot of truck drivers get freight off the spot market, which is basically overflow from the regular market, sort of like they do in commodities. And basically right now, those spot market drivers are going broke because it's very difficult for them to find freight, because right now there's no shippers aren't saying, hey, I need this, I need this, I need this. They're like, hold it, hold it, hold it. Just get it to me whenever you can. I don't even have room for it. So like I said, there's going to be a ton of sales. So look around if you do need something to buy. But like I said, there's always this bullwhip effect. And this bullwhip effect started in China. And to me, it was something they're doing to us because they're basically bullwhipping us to death. If they were to just cut us off, we would at least look for someplace else to go. It's more deadly just to keep turning it on, turning it off, turning it on, turning it off, than it is just to turn it completely off. And they just keep turning it on, turning it off, which sends us into this bullwhip. And then the whips on the both sides, the highs and the lows, are very damaging. High side causes logistical inflation. Low side causes overages and people to go out of truck drivers to go out of business. So that when that next wave comes, freight rates are even higher because there's less trucks to service that freight.
This is almost the opposite of what we had last year, where we couldn't get the stuff in fast enough. So everything was backed up. We couldn't offload the ships. Now the stuff is still coming in, but we don't want it.
Right. We don't want it because we people basically are not buying the wants, except for my wife. And they're buying the needs. And those needs are basically food, and they're worried about, heating and gas and things like that, or natural gas for heating, and electricity. So they're not going out and buying the sneakers and the shirts and the things like that. And all you have to do is ask yourself one thing. It's to prove this is what's your Christmas budget for this year compared to last year? And I'll bet you it's lower. And that mental state of that thought process is exactly what's going on with all these containers on the East Coast. And you don't even want to see.
It's not going to be a good holiday shopping season, right? Let us know down in the comments, folks. Are you going to spend more or less on Christmas this year? I know I'm going to spend a whole heck of a lot less, right? We're in defense mode over here because, I mean, people are spending so much on their rent. They're spending so much on their food, on their gas. That's coming out of their discretionary income, their discretionary spending. And, you know, we talked about bifurcation in the inflation markets a couple of months ago a lot, how, you know, the staples were going to keep going up, the stuff people actually needed. And Mish, I think you were the one it was you or Sage, that the needs are going up, but the wants are going down. There's no money for the wants. There's no money for Gucci bags anymore because everybody's spending everything they want on food. You can't eat a Gucci bag when you're hungry.
Right.
Funny to watch somebody try. I picture Paris Hilton gnawing on her Gucci bag.
You know,
she's already eaten that little crab bait dog that she carries around, and now she's trying to eat the Gucci bag she carried it in.
Correct. So that's kind of where we're at on the logistics side. I've got some other things I'm going to be doing. I've got a great interview coming up. So if you're not subscribed, please subscribe. Mish, if you can drop my channel, that'd be great because I got
Mish is going to drop it in the comments. That's Sage News Live. I bring Sage on every Friday now for the economic traffic report, I call it, because Sage is so in tune with the world of logistics and the movement of stuff.
Right.
That is the economy, right? If energy is the lifeblood of an economy, then the rail lines and the highways, that is the veins that it moves through. Sage is in touch with that stuff. So his channel is excellent. If you want to know what's happening before it hits the mainstream airwaves, Sage has a really good hold on what's going on there. And that's why I bring him on every week. And like me, Sage gets himself in trouble with the powers that be on the interwebs every now and then because he says mean things about the wrong powerful people. And whenever that happens, bad things happen to our channels.
I did. I talked about the railroad. I won't get into any more than that. And that smashed me because there's an up and coming problem with the railroad. Also, I am following a lot of military Navy vessels and stuff like that. So that's another thing I'm starting to do on my channel is go over some of the Navy vessels, what's going on. That's happening. Was it over here? I can't remember where it was.
Your interview with Ryan Macbeth was excellent, by the way. I had never heard of his channel before that interview. I really enjoy his channel now. So that was a really good one. Tell me about the guest you have coming on this week.
The guest I have coming on is going to be Rebecca Kohler, and she is about a bunch of stuff. She wrote the book. Let me see. Basically, let me pull this down. Can I pull this down? Can you see that?
Yep.
She wrote the book Putin's Playbook, and she is a part of giving intel to everybody from the CIA, Defense, DOD, and things like that. And she wrote this book that is basically now the mind of Putin and that has been used to determine where he's going with things. So I was able to hook up with her. She's hooked up with like Fox News and things like that. She was on Glenn Beck. And she's going to be coming on my show the week of the September 5th. So I believe the 7th.
Outstanding.
And we're going to have her on. I'm going to do another one with Ryan. And I've got a couple other things going on, but like I said, some stuff that's some of the stuff I'm covering is this, and I'm going over some of the Navy stuff that's happening and tracking ships and things like that. So yeah, I enjoy doing this type of stuff too with the ships because I am logistics and I am Coast Guard. But that was a long time ago. But yeah, that's pretty much it. And I'm trying to stay out of trouble, and it doesn't help coming on your show.
Yeah, no, because by association, man. Sorry, you are on the list. But thank you for your service.
Yeah, no, thank you. No problem at all. Same as Mish there. He was also in the Navy though. But besides that, yeah, that was pretty much all I got. And I want to thank you for letting me come on. If I'm on here too much longer, they'll know I'm here. So I'm gonna go ahead and jump off. And thanks for letting me come on.
Thank you, Sage. And folks, check out Sage News Live. I will put a link in the comments down below. I was in a rush to get the stream up, and I forgot again to put the link in the description to Sage's channel. Feel bad for that, but check out Sage's channel again. When it comes to logistics, he is the best on the interwebs out of everybody for that topic. Now, I got to send a shout out to my friend Brian Zarb from thetechnicalchartist.com because he sent me this today. And I'm going to touch on this one real quick because this one really grinds my gears. Check out this video. Now, what you're looking at here is Stop Oil Now activists in the UK destroying a gas station. They're taking a hammer and a chisel to make sure nobody can fill up their cars. Isn't that lovely of them? Isn't that so nice of them to come here and absolutely destroy, cause thousands of dollars in damage to make sure nobody can fill up their gas tank? We owe these people a debt of gratitude, don't we? Look at these guys. And you know why they're doing this? Because they know the prosecutors are going to give them a slap on the wrist and they're going to let them out a day later. Nothing bad is going to happen to them. They're not going to have to pay any fines or anything. They won't even have to repair the damage that they do. They're going to walk away scot-free, and they're going to be heroes to their little ESG unicorn rainbow buddy pals, everything. All right. So I did a little digging into this topic, this Stop Oil Now group, and I wanted to know what's up with this stupid light bulb face on their high-vis vests, by the way. Nice high-vis vest. By the way, I'd love to see a video of this schmuck trying to put this vest on. I bet it was hilarious. I bet it's the first time he's ever had a pair of goggles on his face before. But anyways, moving on. This is a link I found about this organization, Just Stop Oil. I'm sorry, that's the name. Just Stop Oil, not Stop Oil Now. It's Just Stop Oil. They're spring uprising protests funded by U.S. philanthropists. That's interesting. Funded by U.S. philanthropists. Where are these people getting the money for their legal defenses? Who's bailing them out of jail when they get arrested? Well, it turns out it is the the LA-based Climate Emergency Fund donated hundreds of thousands of dollars to these activists. The Climate Emergency Fund, that's where they get their money. Okay. Well, who's the Climate Emergency Fund? And then I found their website. This is the Climate Emergency Fund. They help to pay for activism. They fund the movement's leading edge. Oh, that's great. In 2022, so far, they have made $2.8 million in grants to these ultra ambitious groups. Wait a minute, $2.8 million? Well, where do you get $2.8 million in grants? That's not a $5 on a GoFundMe. That's serious money. These people have power brokers backing them. And so I did a little bit of digging into this Climate Emergency Fund, and I found this part here. Now, there's a little quote. Let's not forget that we're talking about extinction, said Miss Getty in an email. Don't worry, we have a responsibility to take every means of trying to protect life on Earth. And that's from Aileen Getty, co-founder and board member. All right, now we're getting somewhere. Because we have this Climate Emergency Fund that gave this incredibly large grant to these Just Stop Oil schmucks who are destroying gas stations in the UK. Well, who's Aileen Getty? Where'd she come from? And then I found the Aileen Getty Foundation, where they're celebrating the Climate Emergency Fund. And they said Aileen provided the foundational grant to establish the Climate Emergency Fund in an effort to support activist voices demanding a more urgent response to the climate emergency. So it's this Aileen Getty lady that is basically the money behind the Climate Emergency Fund, which is the money behind Just Stop Oil, which is the group that's smashing these gas pumps in the UK, making everybody's life miserable. And where did Aileen Getty make her money? Oops. Yeah, that Getty. That's where the money came from for this stupid publicity stunt. These a-holes smashing gas pumps. So some poor guy who's just trying to get to work or just trying to get home or trying to go see his mom on a weekend, whatever, he can't fill up because some a-hole took a hammer and chisel to the gas pump and shut the whole business. Forget the gas station owner, who, if he's lucky, is making a couple pennies a gallon on what he sells, and that he's got to replace these pumps. This is who's behind that. Getty, the gas station. The owner of gas stations is funding the groups that are going around smashing gas stations. Folks, these are the people who are in charge of energy policy in our world right now. These are the people who make the decisions that we all have to live with. This guy, This idiot who probably took 20 minutes to put his vest on. He probably put it on upside down twice before he got it right. That's who's making the decisions. That's who's in charge of our energy policy. And he gets his money from a gas station, from a billionaire gas station owner. Convenient for the Getty people. I'm sure Getty gas stations are exempt from the hammer and chisel publicity stunts. Got to send a shout out to Brian Czar. Brian sent me that video. I saw it. It was like an hour before the stream started, and I hate these stupid stunts. I've been dealing with these people. I told the story about the meeting at the library with Alec Baldwin and Christy Brinkley and the lawyer, and I've been dealing with these people for years, and I've watched them just wreak havoc on global energy policy. And now here we are heading into winter, and everybody is going to suffer from a decade of them making the decisions for everybody. And so I had to dig into this stupid video of these a-holes destroying gas pumps, and it led me to Getty. Getty is paying for it. That's who's in charge making these energy policy. Oh, all these people, right? I'm sure this guy is just a hero in some drum circle somewhere at some liberal arts college. I'm sure they just love this guy. But what they don't say in that drum circle where they're talking about this stupid beta male who just smashed up a gas pump is that he gets his money from big oil. That big oil is bailing him out of jail. That big oil is financing his stupid publicity stunt, probably paying him his salary. I don't know if he's making money for this or not. It's all coming from big oil, folks. These people are full of it. They are absolutely full of it. Anyways, that's me. I couldn't believe it when I saw that story. And I was like, you know what? I guarantee you this is going to trace back to some natural gas company or something. I just knew it. It didn't pass the sniff test when I saw it. And A led to B to C to D to E to Getty gas stations, big oil. Shaking my head. Anyways, guys, it is now 4:23. I've been going for longer than an hour. 496, almost 500 of you watching right now. 499 apparently a second ago. Thank you guys for sticking around. Thank you for watching. Don't forget, check out the links down below to the Silver Symposium. Check out the links to Sage News Live. Check out his channel. I appreciate you guys. Thank you to my Patreon supporters for your support of the channel and everything you guys do, your ideas and your feedback. And thank you, everybody, for the super chats. And thank you, Mish and Sage, for your contribution today. Couldn't do this without you guys. Mish, anything you want to add?
Well, remember that if you can find me in the wild, I will give you a mark dime. The Silver Symposium doesn't count because you know I'm going to be there. But I'm currently in Thompson Falls, Montana. So
I didn't think of that. That would have cost you a lot of merc dimes because there's going to be a lot of people at Silver Symposium. It's good that you put that out there, Mish. That's funny. All right, so that's it. Hashtag where's Mish? If you can catch Mish in the wild, get yourself a silver merc dime. Has anybody caught you yet? Has anybody found you? Oh, they're hot on your trail. All right, I'm sure they're probably catching up to you. Last week it was Lusk. You were in Lusk last week. Now you're in Montana somewhere. Montana's a big state. He could be anywhere. Probably close to a mountain. That's all I know about Montana. I've never been there, but I hear it's nice. All right, guys, we are going to wrap it up there. Thank you so much for your time. Thank you for watching. Don't forget, keep an eye out for that video, my reaction to Jerome Powell's press conference today. That'll be out in a couple of hours. And until next time, live small and dream big.